Good morning, everyone, and welcome to the Summit Series, and thank you for joining us this morning. My name is Robyn King, and I'm the Director of Industry Relations at Payments Canada. And after what feels like a lifetime, I'm back as your host for today, and today's webinar is entitled Partnerships in Payments. Now, as always, we will do a roundtable with the panelists, but we will save time at the end for audience questions. So please do remember to use your Ask the Speaker box, which is at the right hand of your screen. And we will get to as many questions as we can at the end. And you can ask questions throughout the webinar. However, before we get into the discussion, and in keeping with International Women's Day theme this week, I'd like to introduce my all-female cast today. I'll let each introduce themselves, and then we'll dive into the questions. Cathy, let's start with you.
Thank you, Robyn, and good morning, everyone. My name is Cathy Pinn. I am the head of the client management function at HSBC Canada, responsible for all the onboarding, implementation, and integration of our corporate clients in Canada and around the world. Delighted to be here to share learnings, best practices with this group, and also thank Payments Canada for bringing together an all-female panel in honor of International Women's, I call it, Week. So thank you, Robyn, and look forward to the conversation.
Thanks, Cathy. And then Shirley.
Hi, everyone. Shirley Matthew. I'm Vice President of Transformative Product Innovation at People's Group. At People's, we are an enabler of fintechs to allow them to offer innovative products to their clients. And I'm really excited today to be able to participate in this great panel. Thank you.
Thanks, Shirley. And then lastly, Grace. You're on mute, Grace. There we go. Yep.
I am so sorry about that. You think by now, after 2 years of the pandemic, that I would have that right. My name is Grace Jung. Thank you, Robyn. I am the head of industry relations and payment partnerships here at Square in Canada. My purpose here at Square is to enable Canadians to access the economy, and I do that through managing the various industry relations and payment partnerships. Just wanted to share a small relevant fact in the spirit of Women's Day, Women's Week, that women make up 50% of the businesses that Square serves, compared to the fact that only 38% of self-employed Canadians happen to be women. And I really look forward to this discussion today.
That's fantastic. Thanks, Grace. Okay, so thank you for those introductions. As I mentioned earlier, today we are talking all about partnerships in the payments space. And I'm sure all of you know that this comes in many different forms. So let's start at the foundational level before we get into too much detail. And really what I would like to ask first is why partner? What are the benefits of partnering, and what does a successful partnership actually look like? And Grace, I'll throw this to you first.
Thank you. I think in order to understand why Square partners in the first place and the benefits of partnership, we have to go back to our purpose and who it is that we serve. So as I mentioned in my intro, our purpose is all about economic empowerment. And we started that by enabling Canadians to access the economy or to accept payments by inventing that little white card reader that you're all probably familiar about, that enables anybody to accept card payments through their phone or their tablet. And although our beginnings are rooted in helping small businesses access the economy, those businesses that we support, as they grow or the complexity of their needs change, so has the way that we serve those businesses. So it might have started with payment acceptance, but there's so much more to running a business. And if you think about running a business, there's managing inventory across maybe one channel, multiple channels, bookkeeping, managing appointments, managing employees, marketing and reaching your customers. So businesses have an overwhelming number of tools that they may need or use to operate effectively, and they don't all work together. So with Square, we differentiate ourselves with our extensive commerce platform and our ecosystem. And our focus is really on delivering these remarkable products that can service our customers in a cohesive, fast, self-serve way. So there's a myriad of partnerships that we use in order to solve those problems that businesses are facing today. with our platform and our product, with our product and platform partnerships, we take a very differentiated approach. So our platform offers many first-party products that can meet various needs of businesses, but we do rely on our partnerships in order to amplify those ecosystem of services. And those platform partners really extend the range of opportunities and ways that we can further support our customers beyond just payments. And ingrained in those products and platforms is our industry and payment relationships, which I head up. And that's working alongside ecosystem players, whether that's payment networks, financial institutions, vendors, regulators, government, really ultimately to level the playing field for small businesses of all types and sizes. And there's also the internal partnerships, which are also key. Given that Square products are launched across the globe, they require multidisciplinary teams that are across many countries in order that we can launch these products in Canada. I'd like to just paint a picture of an example of what I'm speaking about. So it kind of knits it all together. So recently, Square in Canada launched on-demand delivery for Square Online orders. And what this was it was enabled by our partnership with DoorDash and DoorDash Drive, which is their white labeled fulfillment platform that powers delivery for any type of business. So sellers in Canada can now provide delivery services through this third-party partner with orders that are placed directly on their Square Online website. And with this, Square Online sellers can tap into the DoorDash dispatch a courier service to deliver orders that are placed directly on their website. And they don't have to worry about the costly overhead of building their own delivery fleet or hiring and training additional staff. This provides a more cost-effective alternative than some of those delivery solutions that are on the market. And additionally, and how this ties into our ecosystem is that when customers place an order through a seller's online site, that seller can leverage Square's customer directory to maintain their sales history and better market to those customers. And when they combine that with Square Loyalty or Square Marketing, that further helps them strengthen their relationships and incentivize their patrons to keep coming back. Additionally, if they integrate Square Online with Square Point of Sale, that helps sellers automate their inventory and item management in a very streamlined fashion. So as you can see, that's a great example of a partnership that provides more access to our ecosystem of products, and it makes everything available literally at the fingertips of the seller.
Thanks, Grace. Thanks. Those were the great examples and so many different integration points, that it's almost a business model impossible without partnerships. Cathy, how about your thoughts?
Why a partner? Because we're in payments. Payment does not happen on its own. It's the nature of the industry we're in, whether it's the SWIFT connections required to make a high-value payment move, correspondent banks, intermediary banks, processors like SimCore, front ends like Square. Payments are not possible with partnerships. So I think it's just fundamental to how this industry, how this segment has grown, and it's critical to success. No one can do it on its own, and a payment, in order to be successful, has to be accessible at the front end. The flow needs to work, and it needs to land in the last leg. So that's why it's such a fascinating business to be in, because you need to coordinate all those components. So much like Grace, I think of partnerships internally and externally. So in a large global institution like HSBC, internal partnerships are key. So the business banking client who is using the front end is designed, developed, and supported through one function in the organization. As that payment request flows and needs to be moved from HSBC to another bank, there's other functions like payment operations that gets involved. and then the reconciliation, and should there not, should something happen, because the Holy Grail is STP, but we know that happy path doesn't always happen. So that's the internal partnership one needs, whether it's a large institution like HSBC or smaller institutions. And what defines success in an internal partnership is clarity of roles with functions, clarity of metrics, and you have alignment of metrics. So I manage the function for onboarding and servicing client queries. And our clear raison d'etre is to deliver an exceptional customer experience day after day after day after day. Ensuring that our internal partners' metrics are aligned to us is very critical. Some other group may be looking at other metrics. How do they continue to reduce the number of FTE in their function in order to be more efficient? Another function could be how to reduce the customized requests, which may not align to the requirements for a large global client. So that clarity of metrics, the alignment, and the transparency, to me, are fundamental in internal partnerships. And if I parlay that into a treasury department, I see our customers more and more looking to deeply integrate their payment, their cash management provider into their systems to get to, less manual intervention. That means aligning IT departments. So it's great that the Treasury Department wants to have a host-to-host or a file-to-file connection, but is that work aligned to the IT department's list of projects? So once again, that alignment, that clarity, I think, is key from an internal perspective. Now let me switch to external partnerships and why partner. Lots of different reasons. Growth. There's an asset that a partner has that you want to leverage, be it a distribution channel, be it a piece of technology, whatever it is. But it's typically about growth, and it's typically leveraging an asset that you don't have. And I think we're in an interesting place in the financial industry where the technology is ready and the payment ecosystem is ready. And what I mean by that is API technology makes it that much easier to connect disparate technology platforms. Standards like ISO 20022 also facilitate that connection. Cloud-based technology and the move to payment modernization. Like, that's a recipe for even bigger opportunities around partnerships. And so why partner externally? Embedded finance. I'm going to use that as an example, if I may. HSBC announced in October of last year a partnership with Oracle NetSuite, embedding our financial services within the Oracle NetSuite solution, so that an ERP client using the Oracle cloud-based NetSuite solution can set up an account and conduct an international payment right through the ERP platform, much like how Grace described, bringing everything together for that customer in an integrated fashion. That is where we're going as an industry. That's where we're going as an institution. And I think we're going to see more and more of that, because the last reason why partner is clients. Our clients, whether it's retail, commercial, corporate, large global multinationals, there is no appetite to use multiple systems to get the work done. Being able to bring it all together, whether it's industry specific, function specific, and designed to manage the non-happy path in an easy way, it's critical. I know, in marketing speak, we've been talking about a market of one for many, many, many years. That's where we're going. So imagine a market of one when there's a specific solution for a steak restaurant, connected to Square, where they can do everything off that platform, from ordering product to paying for their product to making reservations and paying their employees. That's where we're going. So partnerships, to me, it's not a question of why partner, it's you have to partner.
Yeah, that's an excellent point. Thanks, Cathy. Shirley, through my work that I know of People's Group, I know that partnerships are fundamental to your model. So I'd be interested to see how you view it.
After the great points raised by Grace and Cathy, you'd think there's no more to say, but I'm going to try anyway. When I think about the motivation for partnering, I think about the fact that all of us, all of our companies have limited resources, be that people or time or technology, and they're only 24 hours in a day, period. There's no more. So what I see partnership bringing to the table really is it allows you to extend in a cost-effective way, to Cathy's point, cost-effective, right? You can extend your reach to resources, be it technology, be it just more hands to do things, be it folks with specific subject matter expertise that you need to be able to deliver a product or a solution. And when you extend that, in essence, you wind up manufacturing more time in the day. I mean, there is only 24 hours, but you wind up manufacturing, right? Especially if you can partner with folks who are sometimes partnering with people in different time zones can be an issue, or it can be an opportunity, right? So partnering with people in another time zone allows you to expand your day into not just your regular 7.5 hours a day. So I think, to Cathy's point, payments, so many pieces along the way, so many different solutions, so many different options, so many different things to be done to make a payment happen, that there are lots of opportunities. And if you don't have the whole thing solved, and you're not a unicorn, and you don't have all the funding, you need to rely on others to make this happen. If you want to make your dream of offering products to customers a reality. So at Peoples, you're absolutely right, Robyn. It's fundamental. It's in our DNA. We are about partnerships. Our mission basically is to exceed customer expectations while delivering financial products to selected market segments. So we have, over the last 2 decades, we have been focused on sponsorship model, enabling fintechs for the most part, even before they were called fintechs, whatever you wanted to call them before. We enabled folks like that to participate in the payments systems and innovate and provide whatever financial products that they felt necessary to support their clientele. We put together a team of subject matter experts in the payments field, different areas. We support issuing, both prepaid. We're the largest prepaid issuer in Canada. We have an acquiring business that's been around for 15 or so years. We work with a lot of large ISOs in the acquiring space. We also provide different functions with respect to moving money, funds transfers, payments, and we do retail banking services as well. So to us, it's about trying to help the folks who are either startups or large. We run the gambit. We want to be able to help you grow, to Cathy's point. So you can start out and maybe outsource more, or you can be a very large, mature company, but just want to focus in on certain things, right? So it's about helping you to do those things that aren't your core competency, or that you may not have the ability to do because you don't have the licenses or memberships. We also have licenses and memberships to many of the more popular payment streams. Again, allowing our fintech partners access to those products and services. So yeah, it's all about 24 hours a day. What are you going to do with those 24 hours a day with your limited money and your limited staff?
Thanks, Shirley, and thanks everyone. So, I mean, I think the benefits are clear, and it's almost like to Cathy's point, it's almost a non-option. And looking at just the news that comes out daily in the payments world, it's at least 1 or 2 stories a day about a new partnership that has been formed. So that was the benefits. But if we turn that on its head, what do you think about the risks that are inherent in partnership, and how do you mitigate those risks? And then, on a similar theme, what is the risk of not partnering? And I think we've touched on that a little, but I'd like to expand on it a little bit. So I am going to start with you, Shirley.
Okay, let me take my breath after that. Thank you, Robyn. This is so important. Risk management is so important for a successful business. Everything you do has risks, whether you notice it or not. There are risks. There are risks to doing it. There are risks to not doing it. So I love the question, and I love the fact that you're thinking too about the opportunity cost of not doing partnerships. So For me, the biggest thing I look for right off the bat is business risk. I focus in on business risk. The folks that I want to do business with, is there a compatibility between our business models? It doesn't make sense to get into a scenario where, as a partner, you're going to be sharing all kinds of information, some of it very sensitive. You're sharing your business plans, you're sharing your business model details. You might be sharing your customer data information. You want to make sure that whoever you're dealing with is going to be trustworthy enough to take that information, keep it confidential, that you're not in direct competition for the same client for the same products. And also that you want to make sure that whoever that you're going to be partnering with is going to be reliable and stable. Because there's nothing like partnering with someone that is absolutely necessary. It's mission critical, the function that they bring to the table, and they can't perform. So those are huge things for me with respect to when I look at partnerships. The other thing is to mitigate these, right? So you're never going to get away with no risk, right? That's just not life. So what do you do about the risk? It doesn't mean, oh, these are risks, so I'm not going to bother partnering. The way to mitigate those risks, in my opinion, the ones that I talk about, is really risk-based due diligence, right? So if you have a partner that's doing a very minor component for you, you don't have to go crazy and send private investigators and figure out what they do. It's a very low touch risk assessment. If you've got someone that's a lot more integral to whatever you're doing, then you want to be careful. You want to take a look at them. You want to do all the necessary financial background checks. You want to also, as I mentioned, look at their model. Is their model going to be, is it going to be a good, healthy relationship where you both bring something to the table, or is someone going to be taking more than giving? And also you want to make sure that you want to look at their past experience, right? What are they bringing to the table? Do they have the expertise? Do they have the track record? You're not always going to find track record, especially with payment modernization and everything is new. But looking at what they've done in the past can help you figure out whether or not they're going to be capable of doing it, right? You're looking at, do they have the right subject matter expertise? Do they do business the way you do, or are your cultures going to clash? As far as opportunity costs, to me, it's all about cost effectiveness. So you want to keep your costs down. Opportunity costs of not partnering, you're going to wind up paying more to either access those resources, whether it's technology, licenses, memberships, more staff, and also you're going to just take a lot longer to get to market, right? Because you're building instead of potentially renting or accessing something that's already built. To start off with nothing technology-wise to support your system, that's going to cost you time and money.
Yeah. Thanks, Shirley. Grace, from a Square perspective, what have you seen on the risk side?
Very much aligned with Shirley, but to add to that, like when you build products internally or when you build services, you have full control over your scope, resources, and even your vision, and even if that changes. But with partnerships, the outcome really is subject to that partner, and their ability or your ability to iterate is really dependent on their dependencies, their capabilities, and their priorities. So misalignment can really risk the quality and the timing of that delivery. So it's really important, I think, as was mentioned by both Shirley and Cathy, to get that alignment upfront at all levels and on both sides. These successful partnerships are the way I think there's no doubt about what we're all saying at our three organizations. Successful partnerships, they require to be built on a lot of collaboration and continuous alignment, and setting the expectation right up front, managing those objectives, and which team is going to be responsible for what and when is very important. I think with partnerships, as we mentioned, it is the way forward, and it is the way to meet the changing needs of our Canadian small businesses. So the risk of not partnering is really that their needs will continue to be unmet. And their success relies on us being able to deliver solutions that are integrated, seamless, and easy to use. Square success depends on those sellers trusting us in order to do that. And so when we can meet their changing needs, whenever and however they want us to, that's when we build their trust. And I think it's a matter of the fact that businesses can't afford to wait years for solutions. And this sort of spirit of we're in this together kind of felt through the pandemic will continue to help drive success and allow us all to work together in order to solve those problems, and not risk the fact that sellers will not succeed if we don't build these solid partnerships.
Yep. Thanks, Grace. And then Cathy, welcome your thoughts.
So I'll start with Shirley, I think, covered off the due diligence. Like that is an absolute critical part of, I'll call it the partnership onboarding and selection. And I'll use the term the Goldilocks principle. Like not every partner is going to fit every organization. So a large organization like HSBC may look at a small, regional specific or country specific fintech, which may have a fantastic solution, but may be difficult to replicate in a global model. So that Goldilocks principle, if I can call it that, I think is an important part of the selection of the partnership that or the partner you wish to do. And in the due diligence, I'd spend the time to really go deep and understand to then go fast. The reputational and brand risk is huge. It's huge. I mean, whether it's people's trust or Square or HSBC, our brand is an incredibly important part of what we deliver to our customers, our promise. Opening up the world of opportunities is the HSBC mission. And ensuring that the partner can deliver on that is critical. And, an example I've seen is a partnership where the call center was outsourced, and the call center measures were about speed of answer, not correctness or completeness of answer, but speed of answer. Great. Did not align to the need to deliver a great customer experience. So we answered your question quickly, but we did not answer it properly. We did not find the right solution for the customer or what have you. So that's a really simple example of how a measure, how a metric can be so misaligned to what you need as an organization and what your partner will deliver. So really critically important to get clear on that and spend the time understanding the people model. So I know Shirley referred to the business model, but the people model. And I'll just go back to the call center. So if you've outsourced a call center as an example, what is that training? What is that end agent training in place that's been established to support your needs as an organization? And understanding the language, the metrics, the approach they're using, what happens when there's attrition. I mean, all those things are critically important in delivering that thing that's so critically important to your business. So whether it's delivering a great customer experience, speed, efficiency, whatever the model is that you have as an organization, think about that alignment right through to the delivery to the end user customer. Your last question, Robyn, on what if you don't partner? I really think that's I scratch my head and really think hard. In the payment space, I don't think that's possible. I really don't think that's possible. I mean, think back to M-Pesa or a Western Union's where you can issue a payment, but that money needs to get to somebody in a very remote location and they need to get cash in hand. Like that whole thing is partnerships, that whole payment life cycle. So I really, maybe others, maybe Shirley or yourself, Robyn, or Grace have ideas, or the audience. I really struggle with, in the payment space, can you go it alone? I don't think so.
That's an excellent point. Thanks, Cathy. And I think you Cathy, raised this, covered this a little bit, and Shirley as well, but I'd like to expand on how do you go about choosing the right partner? So I know we talked about the Goldilocks, or you talked about the Goldilocks method, but what are the other factors you would consider in choosing a partner?
So I think, so I'll start with, I mean, it is International Women's Day/week, break the bias. Check your bias, right? Check your bias. Have you fallen in love with the solution that the partner is presenting you? Like, I really think that's an important part. Whether you're in a leadership position, part of a stakeholder group that's assessing the partner, is really to check your bias and have an objective view of what the partner brings to the table. So go back to, as Shirley said, is this because you don't have enough resourcing? You need a technology solution? You want to quickly get to market with a solution? But bring a broad team to have a real hard, objective look at the partner. Like, to me, that's just fundamental. So, and there's so many examples we can think of. I just don't have enough people to build a call center, or I have a client need and there's a technology solution available off the shelf with a partner that can bring it to market quickly. And I'll go back to embedded finance as an example. Is the partner you're selecting, is their entire culture and metric aligned to what you're doing? So if I'll use the example of HSBC and embedding finances in another company's ERP solution. Is the ERP company, are there sales metrics? Because at the end of the day, there's going to be a salesperson selling this solution to the restaurant. Are their metrics aligned to, at the end of the day, encouraging a full banking setup through the ERP solution? So kind of lots of different things to think about. It starts with, what problem or opportunity are you going after with this partnership, and objectively assessing. Do not, check your biases. Break the bias.
Thanks, Cathy. Shirley, from a People's Bank perspective, what are some of the things you would look at?
So I definitely agree with what Cathy's put out there, and harking back to something Grace said earlier, where you don't, when you partner, you lose control. Let's face it. You bring different parties together. You all have to work together. You all have different limitations, and you need to work within those when you become partners. So to me, it's about focusing on what it is you feel you want to control out of what you're trying to build, right? So focusing specifically on, what part must I own to make this successful? What am I ready to invest in today? And what is it that I like, what's the kernel of your solution? You've got to basically own that part. And then you can start looking at, what other pieces do I have that needs to get done that I don't necessarily want to own? And focus your search for your partner based on that. To Cathy's point, don't get a solution and just go, okay, perfect, looks good. Really think about those things. Which pieces are important for you, for your brand, that you don't want anybody else messing with? And then it's really about, again, I talked a little bit about culture and time zones, but think about what types of gaps you have that you need to fill. So Cathy talked again about, is it more resourcing that you need? Is it a call center that runs 7/24 and you just don't have the support for that? And then in that case, maybe time zone differences is a great thing, right? But if it's collaborating on a piece of technology and you need real-time interaction between people, you want to make sure that your partner that you're bringing to the table isn't in a different time zone if you need real-time access to them. They're sleeping when you're working, and they're not going to answer your call, right? So we've at People's, we've had partnerships with folks all around the world, and some of them time zones got in our way, and so that's why I bring it up. Lesson learned. Be careful what you use people for within different time zones. So yeah, it's all about making sure you're clear on what gaps you're trying to fill, what's important to you that you don't want to lose any control over, and making sure that you align on those important things. So for instance, risk policies is a great item, right? So if you have a certain risk appetite, but a partner that you're reliant on has a different risk appetite, is that going to get in the way? And then also, what about growth? You know, if I'm a startup today and I don't want to do everything myself because I don't have the time or money, but I want to eventually get to a point where I own this piece of it, is this partnership going to allow for that to happen? So those are the types of things I start thinking about when I look at partners.
Thanks, Shirley. And actually, while you were talking, I was just thinking of there's a theory of strategy called jobs to be done, and that's like really looking at what is the real job you're trying to get done here, and assessing that to its core before going ahead on some tangent that'll take you in the wrong direction. But Grace, I'd like to hear what you have to think of this.
No, absolutely. It is, Robyn, the job to be done. And I think I kind of mentioned earlier, our job is to be able to solve for our customers' problems. And I mentioned in my previous answer is we really need to earn our customers' trust in order for us to be successful. And so we're joining the ecosystem as a payment service provider. And I think, as mentioned earlier, payments is table stakes. So the partnerships that we enter are really about being able to that additional value for our customers and being able bring them to things that they couldn't for. So partners, we look for partners that also want to create more inclusion into the payment system, into the ecosystem, and working with partners who want to really create value for the various types of the customers and sellers that we support. This goes back to my point on alignment and determining that alignment from early on to align with our values and our culture and our purpose, and really align with that, creating access to the economy. That for Square, we are a product-driven organization. We are guided by what our sellers are. We listen to their voice. They're that gathering feedback from our account managers, our customer service, our team on lost sales. So we take all of that feedback, and we're guided by the voice of our customer. And really, I think with successful partnerships, it's really about when our partner can advise with our customers' needs, really on problems, the role that we both play in solving those problems. I think also core to partnerships is real human relationships. And I think, as kind of the theme that we heard, is there's definitely an investment on all parties in building that trust and empathy for your partner that will lead to success. So it's kind of like a partnership dating game. I think not a very analogy, but really it is. And in order to build that trust in your partner, it requires work, right? It requires work together, and there needs to be a level of transparency. It has to be fair, and it has to be consistent, and there has to be candidness from the get-go. So that's really for in our partners to drive success for sellers.
If I may, Robyn, I think Grace has really hit it clearly. The relationship takes work. The relationship takes work to get set up, and the relationship takes work ongoing. So I don't want to underestimate, don't underestimate the ongoing work you have to put in managing the relationships, both from a governance perspective, one-on-one with the leadership teams, understanding the supply, the partnerships themselves. Like, this is not one and done, put it away and it works. It is just like a marriage. It needs work every day.
And communication.
Yes.
Yeah, very, very strong communication. Absolutely. Totally agree.
Thanks for that. So I think we've got time for one last quick question. So just quick fire around the table. If we look at payments modernization and the potential changes to access to central payments infrastructure, how do we think that'll affect partnerships in the future? And how do we cater for both the now and for the future in terms of increased access that some of these partners are currently using system participants to gain that access in the current environment? So Shirley, I'll go to you first on this one.
Thanks, Robyn. Good question. I mean, very, very topical, right? Payments modernization, we hear about it all the time. Cathy made a good point earlier. Payments needs partnerships. And with payments modernization, there's just going to be so much going on, such a fast-paced change that it may even put more focus on the need for partnerships. So, in my opinion, granting additional access is fantastic. But just because you have the ability to access doesn't mean you necessarily need to use it. It's not always the right answer to every single problem. So again, think back to what is it that you want to control, which pieces of the solutions you want to control, do you need to control, do you feel is important to your brand, or a kernel, it's a kernel thing to your product. And if that's not one of them, you don't need to necessarily capitalize on that new access that's been provided to you. Or you may not need to do it today. Again, it's that growth thing. So maybe you innovate on the side that's customer facing, because that you want to own that component of it and use a partner to do the rest of it. Maybe ultimately you have your sights on eventually bringing it in-house, but it doesn't have to all be done on day one. So that's my thoughts on that.
Thanks, Shirley. And Grace, as our one non-bank on the panel, what are your perspectives on this?
Ultimately, I think the goal of payment modernization is to boost competition and innovation. And ultimately, as I mentioned, we are driven by our purpose, and that is to continue to solve our problems and give them more choice. And that aligned with why Square partners. So if it's a matter of addressing the current needs through partnerships will continue to be a key element of what we do in order to innovate and to support those changing needs of our businesses. So I think that we still stand to consumers, business owners stand to benefit from the innovation and competition with a modern payment system. Definitely, I think partnerships will still need to take place in order for us to be successful and meet the various within our ecosystem. And really, I think with payment modernization, just better to launch, those relationship building has to start now, like that partnering game really should be in play from now.
Thanks, Grace. And then Cathy, I'll end off with you from an HSBC perspective.
Payment modernization to me is another enabler for partnership. I referred back to the technology's ready, API technology, cloud-based technology, those are standards. I mean, a few years ago, there was a lot of concern moving to cloud. We're all moving to cloud, whether you're a large, medium, small organization. So the technology's there. Add payment modernization, whether it's in Canada or around the world, ISO 20022 standards, richer data, real-time payments, a new link system, like those are all enablers to allow for even more partnerships across the entire payment ecosystem. So I think it's a great opportunity. It is a change. It's a change for the standard Canadian payment environment that we've had with a strong group of large domestic, incredibly capable organizations. And now a whole new group of payment service providers are going to come in, nimbly, agile, and come in and provide new solutions. So it's going to be different. It's going to be a different world. The rules, the policy, those are really going to be key. And I know Payments Canada is working feverishly on it. Those are going to be key because we can't risk the safety and soundness of what we do. I mean, I think at the end of the day, when we look at the Canadian payments ecosystem, it has been a strong, safe, sound, albeit sometimes not agile, not always the most quick to market with things like real-time payments or pull payments. But safety and soundness is kind of foundational. So I'm really looking forward to it. I'm really excited on a personal level. I think we're going to find some really new, innovative solutions that we hadn't even thought of, and learn from markets around the world. And imagine what we can have when this modernization can enable cross-border payments. Like, that is awesome.
Thanks, Cathy. Spoken like a true treasurer. So that's all for the formal questions. We can now move on to audience Q&A. There was quite a few that came through, so we'll get through as many as we can. Now, the first question is that there's a traditional perception that financial institutions and paytechs or fintechs are on opposite ends of the spectrum. So wondering what your take is on this and if we're seeing relationships evolve. Shirley, I think I'll go to you first on this one, and maybe Cathy and Grace can chime in.
Sure. Thank you for that question. I will preface with the fact that I am a board member of Paytechs of Canada. And so I work closely with the Paytech community in that role. And yes, there's definitely that thought that there's a bit of headbutting. But honestly, there is enough room in the ecosystem for everyone to participate. Some people, we talked a lot about specializing, figuring out what you want to control and what's most important to you. And, Cathy talked about the incumbents in the marketplace who are large and have been doing this for a long time, and they bring a lot to the table. But I think we all also respect the fact that the fintechs, paytechs, lendtechs of the world also bring a lot to the table and can provide solutions, as Cathy says, that we've never even thought about before, right? So I really do think that there's a lot of opportunity for all of us to work together, do our specialization, and partner. As we said, it's very important to partner together so that we can make the best use of everyone's resources and this 24 hours that we have in a day. I think, the additional access is on its way. It'll play out to see who decides to take advantage of that immediately, who decides to wait a little bit to do it. But I think ultimately we have players around the table who can come together. If we can all agree that, we're stronger together, I think that's a way for us to move forward.
Thanks, Shirley.
I think there's been a huge evolution. I've had the opportunity of working for a payment technology company prior to my role at HSBC. And when fintechs were first in the market, there was a bit of a, oh no, what's going to happen? Are they going to take the entire market? And there's been a huge evolution. If you look at any organization, any financial institution, large, medium, or small, there is a group that's focused squarely on innovation and not growing everything in-house, but actively searching and proactively reaching out to see what those opportunities are, what other solutions are out there to partner with. So there's been a real change and a partnership mindset. I'll go back to brand. There is still a significant amount of brand equity in a financial institution. And so being able to leverage that brand equity with a fintech, and a fintech could be also small, medium, or large. We think of fintechs as two people in their garage, and that's not always the case. We've got large fintech companies out there as well that we partner with that are thousands and thousands of global multinationals. So I really think the model's changed. It's evolved. It's one of partnership. It's one of working together. And I'll go back to the Goldilocks principle. Not every fintech and one institution's fintech may not be another institution's fintech partner. It is about making sure it's the right fit from an opportunity or a problem-solving opportunity. So I hope the market senses this. Maybe this is something Shirley and I can have an offline conversation on, being on the board of Paytech, to understand exactly what the sentiment is and what more we can do as an industry.
So just in the interest of time, I'll move to the next question. Cathy, maybe for you first. How do you keep the integration seamless, especially when you factor in things like security, data sharing, those sort of more sensitive aspects of partnerships?
Well, I'll go back to the due diligence and risk-based due diligence is I think the term Shirley used. In the planning, ensuring that you have thought that out. And when you work in an organization around the world, the data protection rules are very different, country by country, region by region. So a risk-based due diligence approach, bringing in the right people to make that happen, and working through that integration activity. And plan for the bumps. Sorry, I guess two things. Plan for the bumps, because there will be. I mean, I am an optimist, and I think the happy path is awesome and what we strive for, but plan for the bumps because there will be bumps. So in your project planning, make sure you're planning for those bumps, and bring the bring the right people in those bumps. When you find those things that are causing the hiccups, bring the right people to solve for it, and build small. I mean, gone are the days where we have a 2-year project plan and we have the ideas, the business requirements, the development, the rollout, the pilot, the go live. Agile, fail fast. That's the way we've got to work. That's how our partners work now, and that's how we're going to get to the market much more quickly.
Thanks, Cathy. Grace, I'd like to go to you for the next one. Do you believe there's any capacity limit on the number of partners that would work best for a company? And then following on that, what are your views on partnering with competitors?
Good question. Is there a capacity limit for the number of partners? I think our partnership kind of itself, especially on our product and platform model of openness, and that a lot of APIs where partners can integrate easily onto our system. The developer community can innovate on our platform. So I don't think that there's a capacity number on it's a matter of can those partners help us deliver the solutions and unmet needs that we need to solve for. With respect to partnering with competitors, I mean, I guess that's a sense of cooperation, and it's about how we amplify value for the customer. So it's definitely a possibility where we're partnering with a competitor, but it's maybe I'll throw it off to Shirley to.
Sure. Thanks, Grace. So, just getting back to capacity limit, Cathy talked a bit about the fact that it's like a marriage, right? You have a partner, like you have a partner in marriage, and you need to keep that partnership going, right? You need. I'm hearing echoing. You want to be able to make sure that you have enough time to manage those partnerships. If you don't have enough time to manage the partnerships that you have too many partners. I think that's basically what it boils down to, right? If you've got the time and energy to do it, then go for it. And as we've all said, there are a lot of opportunities to partner, and you could have people specializing in certain areas, so you have to wind up partnering with a number of people. So it's just really all about what's your capacity to coordinate those partnerships and keep an eye on them ongoing. As far as competitors, absolutely, I think you can definitely partner with competitors. You just need to make sure that what you're doing is ring fenced, that you're not exposing yourself and your plans in areas that might be sensitive, that you may wind up regretting partnering with them, right? So there are different things that you can partner on. They may have one aspect solved and you may have a different aspect solved. And so therefore together you're better. and you can ring fence things so that you don't actually wind up butting heads on competition.
Thanks,
On the
Shirley.
on the competition front, just I may be dating myself. The early days of ATMs, they were bank branded, and they were for the bank that you banked with. And where are we today? They may be bank owned, but they're used by everyone, every financial institution card holder, whether in Canada or around the world. So partner with competition, absolutely. Make sure it's not a core differentiator. You don't want to partner on a core differentiator, but if it's an asset that is really helps from a ubiquity perspective and doesn't disadvantage you, yes, go for it.
Thanks, Cathy. And then in the last 5 minutes, in the honor of International Women's Week, we'll just extend the day to a week like I do to my birthday. What is the best bit of advice you've received for your career? And I think I'll go around the room for this one. So Cathy, I'll actually just start with you and just a quick fire round.
Check your bias. And what I mean by that is your internal bias. If there's an opportunity that's in front of you, don't look at it and say, oh my goodness, I only have 8 out of the 10 requirements. You have more than enough. So check your bias, and we all have our internal biases. You're on mute.
Grace, I'll go to you.
Really, I think it's a matter of the fact that we are women. There is that, and as we know, it's about breaking the biases, but also it's the biases in your own mind, right? Don't let the bias that does exist affect your level of confidence and your belief in yourself that you are capable as a woman, whether that is a young woman just starting out in their career or about to embark on having a family, or however your life situation is. It's not because you're a woman, and it's that you need to find that empowerment within yourself. And there's also a community of women that are there for you, and a community of non-women that are also there to support. So that's my 2 cents.
Thanks, Grace. Shirley.
I'm going to cheat and make two comments. So the first one was, don't be afraid to take on something that you aren't perfectly matched for right away. Right? You'll learn. I was given opportunities to take on different roles that I didn't. Most of my roles in all of my career have been the first time anybody has ever done that role. So I had to make it up myself. But the best advice was, just jump in, you'll figure it out. And the other one was around mentorship. I had great mentors throughout my career, and basically what their lesson to me was, or what they're teaching to me was, mentor others. Make sure you mentor others. And I know it's International Women's Week, but I think this also applies to men as well, right? So we want to make sure that we're mentoring everyone to make sure that we help others, live the life they want to, get as much as they can out of their job, and ultimately make our company successful. So those are the 2 pieces that I brought.
That's great. It's a great note to end the webinar on. So thanks, ladies. Thanks for sharing all your expertise today. It's been an absolute pleasure. It's been a pleasure getting to know you through this process. And this is actually the last of the summit series before the main event, the real event, which is the 2022 Payments Canada Summit, which will be taking place virtually again this year. It'll be from the 26th to the 28th of April. So be sure to register. And although we are sad that we can't see you in person, we are very excited about what we do have planned, and there'll be a ton of content to dive into. So make sure that you go to thesummit.ca and register today. So thank you, everyone that joined us today. Thank you for your interest and your time. Stay safe and have a great rest of your day.